This is back on the top story. The US President Donald Trump's rollout of sweeping tariffs on virtually all the US imports have shattered the markets. This is how the markets have reacted. Investors have dealt an emphatic rebuke of his effort to reorder the global trade. About $2 trillion have been wiped out from the S&P 500. The index stumbled more than 3.7%. That's not all. The Dow Jones Industrial Average fell 3.1% or 1,300 points, and the tech-heavy Nasdaq plunged 4.8%. As American stock indices stumble, the dollar has also weakened. The US dollar weakened by 2.07% against the Japanese yen and 1.53% against the euro. The damage has been heavy on companies whose supply chains are mostly dependent on overseas manufacturing. Among these companies, retail stocks are some of the hardest hit. For instance, Lululemon and Nike are among the companies with manufacturing ties to Vietnam. Shares of both the companies have plummeted by more than 11%. Popular shopping destinations for the average American such as Target and Dollar Tree have also seen their stocks fall by more than 10%. Ralph Lauren has also lost nearly 16%. Apple, which makes the majority of its US sold devices in China, has fallen as much as by 9.5%. In fact, $275 billion in Apple's market value has been wiped out. Other tech titans have also taken a massive hit. Amazon stocks have fallen by 7.9%, Microsoft is off 1.5%, and Nvidia is down by 6.9%. Now, that's not all. Semiconductor and the industrial companies have also taken a beating. The Philadelphia Semiconductor Index has sunk by more than 6%, with Micron Tech down by 11% and Broadcom down by 7%. Meanwhile, the Caterpillar and Boeing have dropped at least 6%. But it is not just the large multinational companies that investors are taking a hit from the tariffs. The small businesses categorically are also faring worse in retaliation of the reciprocal tariffs. The Russell 2000 index, which tracks smaller publicly traded companies, is down by 6.1%. It has now lost more than 20% since the peak in last year, November. What is clear that the breadth and the severity of the levies have dwarfed those that have been imposed by Trump during his first term. They now threaten to upend global supply chains, exacerbate an economic slowdown, and boost the inflation. It has also left the investors struggling to game out what the levies would be to the corporate profits. So, can one consider this a harsh early verdict on Trump's trade agenda? And if the tariffs do trigger recessions, will we see people scrambling for bonds? Well, to in fact speak at length on this and to also understand this in proper context, I have Dr. Sharath Kohli, senior economist, as always with me live on the broadcast on how in fact the decision, the big announcement that the world was closely watching has fared, and very categorically, in fact, how the markets have reacted to this. Mr. Kohli, appreciate you joining me this morning. Thank you very much for speaking to us. How do you react, in fact, to the markets which have been in red, and stocks, not just the big investors, but the small companies as well?